a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ETFs that have been impacted by the banking crisis. And there's a lot to talk about. We will talk a little bit about the crisis and ETF winners and losers. So markets have been on a wild ride since the collapse of Silicon Valley Bank, SVB, which is the largest bank to fail since the 2008 financial crisis and second largest US bank failure ever. Just before the collapse of Silicon Valley Bank, cryptocurrency-focused bank Silvergate had announced that it would shut down. Now, what happened to Silicon Valley Bank? Let's talk a little bit about the crisis. So it was the biggest lender to tech startups, and it grew rapidly during 2021 and early 2022, nearly doubling its deposits in just a year. And that was thanks to the boom in IPOs, second offerings, SPAC fundraisings. And the bank had invested a large part of those deposits into long-term treasury bonds and agency-backed securities. So as interest rates spiked over the past few months, the value of those bonds plunged. At the same time, its customers started withdrawing money because of the end of zero interest rate, easy money. So liquidity was drying up. So basically, in case of Silicon Valley Bank, it was a mismatch of assets and liabilities. They totally failed at managing the duration risk. So government and regulators, they worked over the last weekend and announced sweeping federal rescue of the industry. And they assured that all depositors will be fully protected for SVB as well as the Signature Bank, which they also decided to shut down due to its vulnerability. Now, under this bailout plan, shareholders and certain debt holders will not be protected. Now, all these three are unique, very unique banks that operate in niche areas, but investors have been dumping all banks, particularly regional banks, smaller banks, because of the fears of contagion risk. First Republic Bank was under trouble, and though last Thursday, big banks, big US banks, a consortium of biggest banks, they announced a joint rescue of $30 billion. But we have seen that shares, FRC shares, are sliding again today. And then this Credit Suisse crisis. So this weekend, Credit Suisse was bailed out by UBS. Now let's take a look at winners and losers. So obviously, bank ETFs, they have suffered their worst declines since the 2008 financial crisis, and investors have piled into safe haven assets. So whenever there's uncertainty in the market, safe haven assets like gold, long-term treasury bonds, they benefit. So those ETFs have benefited. Volatility ETFs have also done well, and I would like to remind investors that some in volatility ETPs, exchange traded products, are exchange traded notes, and Credit Suisse crisis has put in focus the risks related to exchange traded notes, and I have done many videos in the past about the differences between ETFs and ETNs. So please aware of the risks related to volatility ETNs if you're interested in them. Then many investors believe that all this crisis and uncertainty, this would force the Fed to alter its interest rate hike plans. So many interest rate sensitive assets have also benefited since this crisis started. Now, looking at the bank ETF since March 9th, that is the date of collapse of Silicon Valley Bank, regional bank ETFs have suffered a lot. IAT is down 23%. We'll take a look at these two ETFs in a bit. And KRE, which is the equal weighted regional bank ETF, that is down about 18%. Broader bank ETFs have also been impacted. KBE and KBWB, these popular broad bank ETFs, they are down 16% and 18% respectively. Now, many investors use ETFs to express their view, either positive or negative, on a particular sector. So we have seen an enormous spike in the volumes of these ETFs, particularly KRE, and also a lot of option related activity in these ETFs. But ETFs have done what they are supposed to do. They have provided liquidity, and they have also performed the role of market providing market prices during this crisis. Let's take a look at these two regional bank ETFs, what's going on. So let's go to the quote page on Zacks.com. This is the iShares regional bank ETF. We had rated it high risk and at a sell rating. You can use the link to go to iShares. So if you own this ETF, or if you're interested in trading this in this ETF, please do read iShares' note on the events in the banking sector and what they are doing. And similarly, let's take a look at KRE, which has seen a spike in its volume. So this is what State Street says. Shares of Silicon Valley Bank and Signature Bank have been valued at zero price since March 13th. So this is an equal weighted ETF, so this suffered a little less than IAT. Now, let's take a look at the biggest winners. So, Bitcoin ETF surprisingly were big winners. The biggest Bitcoin ETF, the ProShares Bitcoin ETF BITO, which tracks Bitcoin futures. We know that there is no spot Bitcoin ETF in the US till now. The SEC has not approved, but this ETF, ProShares Bitcoin ETF futures ETF BITO, has been tracking Bitcoin prices very closely, and it is up 36% since the crisis started. And there are many explanations, many reasons given by experts. Bitcoin is supposed to be an uncorrelated asset. It is supposed to be a safe haven, digital gold, etc. But we have seen in the past it was not correlated. It closely tracked the Nasdaq technology, Nasdaq QQQ index and index ETF. It also did not act as a safe haven during the past crisis. But this is a banking crisis, and some experts have pointed out that Bitcoin is seen as an alternative to traditional financial system and to the US dollar. That is why Bitcoin has done so well. Incidentally, Bitcoin was founded around amid the last banking crisis, though again some experts have pointed out that it was not a response to the financial crisis. Satoshi, the Bitcoin founder, was working for a long time on Bitcoin, on a crypto asset, digital asset, which was an alternative to the traditional financial banking or financial system. Volatility ETPs, as I mentioned, so VIXI, the ProShares volatility ETF, is up about 17%. Gold makes a lot of sense because investors put a lot of money, they pile into safe haven assets like gold. And gold also benefits from lower interest rates because it doesn't yield anything. So when interest rates go up, investors use other higher income yielding assets, and gold suffers. Technology ETFs have also done quite well for two reasons. Technology stocks are interest rate sensitive, and also because they are big tech stocks, are also kind of seen as these safe haven equities, stable companies that may likely to do well during periods of turmoil, or if the economy goes into a recession. So let's quickly take a look at this technology ETF that has done quite well. So you can use the code page on Zacks.com, and using the link, this is the iShares US Technology ETF, and let's take a look at the holdings. It holds Apple, Microsoft, Alphabet, Nvidia, Meta Platforms, and Apple, Microsoft, Nvidia. These are the stocks that investors have really favored since this crisis started. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our videos so that you do not miss anything. And I will see you next week.